Namaskar. Welcome to a special video on the tax proposal likely to be featured in the new budget. In Hindi, we have a word which is called pohni. Pohni means new beginning. And this year, this budget is going to be a new beginning because Finance Minister Nirmala Sitharaman will be the first Finance Minister to present her budget on a Sunday. So this is a new beginning. And what are the new things which are likely to be on the tax front? We have three lady tax experts to talk about all those things. We have Tanushree Roy from Nangia, Richa Sawhney from Grand Thornton Bharat, and Sonu Iyer from EY India. Sonu, let me start with you. Last year, we had a lot of things on the direct taxes. And in fact, it was said that effort is to boost the consumption to provide more and more relief to the middle class. Now, what next?
As I said, last year we've had, in fact, the last 2 years we've had bonanza as far as tax rates are concerned, the widening of the tax slabs. And pretty much seemingly the government has achieved its objective of getting more and more taxpayers to move to the new tax regime. We are also kind of mindful of the reality that there is a commitment to maintain the GDP, etc., and to maintain the fiscal deficit that was committed 3 years ago. So, personally speaking, I would think that we would have any headline shaking tax rate cuts or widening of slabs any further because A, things are going well. We've got more and more taxpayers to move to a new tax regime. And also, we have a brand new Income Tax Act 2025, which comes into effect from 1st April 26. So that act has been already, passed through the parliament, etc. So it will be too soon to make, dramatic changes to the Income Tax Act per se, because it's, really getting kick-started from 1st April 26. So that's my take on it. I'm not expecting any headline kind of rate cuts or, bonanza populist measures this time around.
Tanushri, I believe the headline would come from the custom side in the indirect taxes. What is your take on that?
On the customs front, of course, in October, we saw a major notification which kind of consolidated quite around 31 exemption notifications. So they are now trying to rationalize the customs duty. There is a growing demand that, custom duty rate should be rationalized from, as of now, we have some 8 duty slabs. Like in GST, there is a growing expectation that, of course, those duty slabs would be merged and maybe, come down from, say, the existing 8 to 5 or 6. Apart from that, digitization of customs duties is and the procedures therein is a growing demand. As in GST, again, a similar expectation is there that as of now, customs involves too much of paperwork. So that's why there is an industry expectation that digitization would be brought in quite more seriously so that, of course, we reduce the paperwork. Aside, I think the main demand from a customs perspective is a customs amnesty scheme. Now in GST, of course, there have been some amnesty schemes in service tax. We've seen the Sabka Vishwas scheme. So there is a growing demand that, at least from a customs perspective, there is an amnesty scheme which is soon brought in so that a lot of revenue, which is as of now stuck in litigation, that can come through. Then again, I think from an advanced ruling perspective, as of now, there are just two benches for advanced ruling. One is at Delhi and the other is at Bombay. They cater to the major ports in India. There, again, because there is so much of litigation and interpretational issues in customs, we would expect that probably those two benches, if they can be made to four by opening two more, regional benches. Again, customs duties in advanced rulings, so there is a validity of 3 years. So if you obtain an advanced ruling under customs, there is a 3-year validity. If that can be extended to 5 years, right, even that could be a very good measure. So, nutshell, from a customs perspective, I think digitization, rate rationalization, and an amnesty scheme. I think that is the primary 3, 4 expectations that industry would have from this budget.
Yeah, Richa, on the international taxation front, post Tiger global ruling, there are a lot of things to be, being discussed. Of course, it went into favor of the income tax department, but still some changes are expected on the international taxation. What is your take on that?
Shishir, first of all, I think though this decision was in context of capital gain, but it can be extrapolated to the other revenue streams or the other payments that are made to non-residents. So, what it creates is a sort of uncertainty for the regular payments being made out, say, for instance, interest, royalty, FTS. When a deductor is making a payment to an overseas entity or an overseas person, what they used to do was TRC was considered almost sacrosanct. Then you could pick up Form 10F for the information which was not available on the TRC, and then of course the no P declaration, and for income characterization the agreements were looked in. Now, when the Supreme Court has indicated that this TRC is no longer a sufficient gateway to treaty relief, the issue becomes what is the additional due diligence required by people, by the resident taxpayers here when they are making these regular payments. So there is
Mhm.
an immediate need of what is required by them to to carry out their responsibilities, because there are penal consequences and interest consequences attached to non-compliance. So that guidance, if that comes in, that will be really great at this juncture. Otherwise, there will be a reluctance in many cases that they do not really give the treaty relief at this juncture, and you stick to the domestic tax rate, or there might be an insistence for more nil withholding or lower withholding certificates from the tax department. So
Okay.
this is the primary ask, and of course, from a substance perspective, the thrust has been on substance in this decision. What exactly are the parameters that the government will consider or the tax officers will take into account to establish substance? Because that's got a relative subjective element to it, that aspect, and detailed guidance on GAR now that it has been, the invocation has started taking much more force.
So, no, one thing is very, which is in the demand is, I would say, that now 82%, almost 80 to 82% people have opted for the new tax regime. And it seems that the government is going to set up a kind of a sunset date for the old tax regime. Not maybe in this budget, maybe in coming years. But do you think that the government is really in a kind of, say, discussion that they are going to done away with the old tax regime completely?
Sure, my personal view is that they've achieved so much without having to be very vocal about, the sunset clause for the old tax regime. So they will play along for another year or two before we see more tinkering in terms of trying to take it away and move to only a single unified tax regime. I think the
Mhm.
case for maybe a year ago was very strong that you move towards a unified tax regime. But statistics suggest that without doing that, they've been able to increase compliance under the new tax regime. And all the changes have been made in the new tax regime. So, in a way, it's a clear messaging. But I think there are still people who, because of where the deductions are, substantial, they still want to file that. But it's becoming a minority. So I would say there's some time before we see it being completely revoked.
Okay. And the important thing is that if I go by the percentage, it may be 18% or 20%, but if I go by the absolute number, that number is very high. I mean, if I talk about 1.5 crore or 2 crore, it's not a small number if 10 crore people are filing the income tax return. Tanushri, now I'm coming to you about the GST. Of course, budget is not something for the GST rates and everything, but budget is more about what kind of legislative changes are required in the GST as recommended by the GST Council. I believe that there are 4 or 5 changes which was recommended by GST Council in its meeting on September 22nd, 2025. Do you think that those changes will be there, and what could be the impact of those 5 changes?
See, one of the major changes which the GST Council had, of course, announced was, the change in the place of supply provisions for intermediary services. Now, intermediary services have been a subject matter of dispute ever since I think the introduction of GST. So that while that change was brought in, the place of supply provisions were changed to the general provisions, which is the recipient-based provision. That enabling provision in the legislation was missing. So that I think likely that it should come in the budget this time, and of course that will bring down a lot of litigation because now such services can clearly be treated as exports. basis the place of supply provisions. Secondly, of course, I think the compensation cess is something which, that change was brought in. It was kind of taken away. There was a sunset clause to it. But there is a lot of credit of compensation cess which is lying with business. Now, that really leads to a blockage of the working capital. And of course, if something could be done to allow the refund of that compensation cess, because that is, something which was validly allowed in terms of the law. So if something can be done for enabling industry to claim refund of those cesses, that will of course be helpful. Yeah.
I will just stop you here because there is a petition, also bunch of petition in the Supreme Court against that particular thing. So, do you think that the government will wait for Supreme Court to dispose that matter and then take a legislative action, or just do the legislative action and inform the Supreme Court that this we have done? I'm sorry, I have stopped you in the middle of this discussion.
No, no, I agree. Of course, there could be two, three perspectives to it. But in my opinion, it'll be a welcome move if the government does something regarding the refund. As I mentioned, these are legitimate credits which were earned in accordance with the law. And given that a lot of these credits are lying with the business, this leads to a lot of working capital blockage. So, of course, while I do acknowledge the fact that the Supreme Court matter is pending, but if something really can be done to at least give a hope that yes, the government is looking at a refund, this would really help business. Then again, of course, the inverted duty structure refunds, that is also something which the industry has been demanding. So as of now, the inverted duty structure refunds is something which are allowed only on inputs. Again, the credit on input services and capital goods is blocked, right? So that again leads to working capital blockage. So somewhere if the government could increase the ambit of the inverted duty structure refunds to be allowed on input services as well as capital goods, that will also help trade. So I think those are a few expectations, at least from a GST perspective. And of course, the age-old thing that petroleum products should be brought into the GST net. I mean, that is needless to say that while I don't see it happening this time as well, but yes, that issue has been pending ever since the introduction of GST.
In fact, Tanushree, I still remember that when the GST law was being framed, and this was one of the major demand from the opposition party that that should not be part of the GST. So they made a very interesting line in the 101st Constitution Amendment Act, which says that the date will be decided for imposition of GST on petrol. I mean, of course, the motor spirit. They have used the word motor spirit, high speed diesel, gas, natural gas, crude oil, and the ATM. So they have carefully crafted the word date will be decided. That means it is not constitutionally debarred. Now it is in the domain of the GST Council to decide that when the GST is to be imposed. And my understanding is that covering this GST meeting since 2016, my understanding is neither center nor state will agree to impose that thing because of the revenue thing. So that
Yes,
discussion will go on. Intention will be there, but the implementation will always be a question mark.
that's true.
Now, Richa, OECD, that pillar one and pillar two, there is no certainty. Now, I mean, from a sovereign point of view, what more can be done from the taxation, international taxation point of view, keeping in mind that there is no fixed date of implementation of pillar one or pillar two?
Well, I think the government is going quite in a cautious manner. So, I think the other things that could be done from an international tax perspective is one, that equalization levy was withdrawn in anticipation of Pillar 1 coming in.
Mhm.
Now, what that does it that those income streams which were earlier getting covered in 6% and 2% levy, they come back into the income tax domain. Now, what needs to be done here is that more clarity on income characterization of these income streams should be given. Because prior to EL imposition, what was happening was there was a lot of dispute on how these income streams, and there are new business models and increasingly newer business models coming in, more from the digital domain area also. So there was a lot of dispute on whether this can be characterized as royalty, FTS, or business profit, leading to a lot of litigation. So if some clarity on those business streams income streams which go back into the Income Tax Act and would now again need to be characterized, if some clarity be given around those, That I think can help reduce litigation, which will is likely to brew up if clarification is not received. So I think that is critical at this point of time. The other important aspect is recently we've had a couple of courts actually saying that MLI is not applicable unless a specific notification for each treaty is given. Now, this creates confusion from a treaty interpretation and treaty application perspective. So it's very important that this is cleared right now. The government should come up either with a clarification or some enabling provision under the act to state that there is a commitment for MLI implementation, so that again, the disputes that can arise on people taking different positions based on these verdicts that have come in on applicability or non-applicability of MLI provisions in a tax treaty, that can be done away. I think these are two critical things from a international tax perspective that need immediate consideration.
So now I'm coming to the basic architecture of new tax regime. When the new tax regime was introduced, it was said that there will be no exemption. Of course, there is just one exemption, which is I believe is the NPS thing for the government employee as well as for the non-government employee also. But now there is a demand to make it more attractive. Some exemption can be included in that. Do you think that there is a possibility of that?
Shishir, if you really trace back the last few years, when they came up with new tax regime in 2020, it was
Hmm.
sans all deductions, etc. Then there was hardly any, movement towards the new tax regime. So then they brought in standard deduction. Then also they weren't able to get that, impact there. So generally standard deduction was enhanced, rebate was enhanced. So you've seen some sort of middle ground being reached. Having said that, I think if we go back to introducing more exemptions under the Income Tax Act 2025, then we're again, defeating the purpose, because the whole purpose with which Income Tax Act 2025 was tabled, if you remember, by the Finance Minister in 2020 budget, was that over a period of time, the act has become, riddled with multiple deductions, exemptions, multiple provisos, making it very difficult for a common man to comply with the law without taking advice of professionals. That was the stated objective. Now, if you start doing the
Mhm.
same thing with the new Income Tax Act, and that too, as we are at the kickstart point on 1st April 26, if we are talking about more changes, then I think it'll defeat the purpose. So, at least for the first year, nothing happens. There could be other compulsions later. You also look at you spoke about it earlier on, the whole bonanza or the consumption drive that they wanted to achieve. We've seen people spending money. In fact, as a, from a policy perspective, if I look further into this, I would think now it's time to maybe introduce deductions, if at all, which are linked to long-term savings. Because we are talking about an economy that started out with people who were at least the generation ahead of us, and even my generation perhaps focused on savings because we had come. Now we're talking about Gen Z or the younger people, believing in consumption and spending more. I think to drive some sort of incentive, very much similar to what Tanushree would have seen in the production linked incentive kind of regime, I would think that something like this, saving linked incentive for, give an option, an avenue for people to save. So that kind of savings which encourage savings which are linked to, say, national priorities, whether it's energy, renewable energy, whether it's infrastructure. You can bring that in because that is useful for all the individual who is saving plus the country, and bears well for the overall architecture of our tax system. So that's my take on that.
Tanushree, during the winter session, we saw introduction and passage of two bill. In fact, enactment of two bill. One is, of course, the Health Security, say, National Security Cess Act, and of course, the Central Excise Amendment thing. One key issue at this moment, especially in the excise one, is that BD thing. I mean, if we talk about the tobacco, BD is one area where we have not seen the actual incidence which was during the the pre-compensation cess, I would say, regime. Do you see some kind of changes in that particular thing? I know the time is very short. We have just enacted the law, and again, going for amendment in the budget session may not be a very practical idea. But what is your take on that?
No, seems unlikely. I mean, the act has just been enacted, so seems very unlikely that any kind of amendment should be brought in the budget, at least on this aspect.
Can't it be done through the notification?
Yes, it can be done, but then I think I'll have to look at the that analysis a little further. But immediately, if an act has just been introduced, it's very difficult to contemplate that a notification should be just brought in the budget, right? In the next session to make amendments.
Richa, one thing is which is being in discussion, of course, that is also part of Sonu area also. That is basically TCS issue. And why I'm raising this TCS issue, because the LRS thing is getting impacted, especially those who are going to study abroad. There are a lot of thin line that where you are getting, where you have to pay the TCS and where don't have to pay the TCS. Do you think some clarity is required on this moment? And then I will also ask the same question to Sonu also. Yeah,
I
first.
would raise a rather fundamental issue in relation to TDS and TCS itself first on this one. One is that, the whole thing of establishing transaction trade. This is the entire purpose of these two regimes, which is there, which requires a fundamental rethink right now. These were this the whole essence of these two regime, both TDS and TCS, is that there is no other way that you can get hold of this information. Now there has been digitization of the economy, and all this information is readily available. There is the GST regime which has stepped, which comes in, and where a lot of information on transactions is there. You have the SFT regime where all the high value transactions get come in. So there is a need of a fundamental rethink on why do we need these so many TDS and TCS provisions currently. Now, if you look that if I were to just pick the TDS only, there are about 40 rates which are there, 0.1% to 35%, many more in the case of TCS, and we are continuously expanding this. So there is a need to see which of these sections are actually generating significant revenue for the government. There was a past study in 2018 which carried out, which says that only 4 to 5 of these sections are generating 85% of the revenue from the TDS and TCS domain. So we need to rethink which are those sections. We need to club all the others together. Those 0.1% to 35% rates which are there, they have to be reduced to say 2 or 3 rates, because there is a lot of confusion on the rate application, even if people want to comply, and therefore there is subsequent litigation which happens. Then on the TDS and TCS certificates, now every information is already available in Form 26AS. So that has to be done away with. That's a critical element. And again, these have to be used as things of last resort where information from other sources is not forthcoming. Now coming on to the TCS on LRS, after this was introduced, there was some data which was released by RBI, which still showed that a significant proportion of the remittances are still being used for education, for medical, and these and travel. Now, there are certain fundamental issues which are these cater to. One is education. Look at the demographic situation our country is in right now. Are our education institute, our higher education institute, offering enough seats to all our young aspiring students who want to take up this thing? So this is an inherent problem which is there. So there is no way you can control or conserve the reserve just because of TCS issue. Again, travel is something Indians have been bit by the travel bug. Traveling in India today is more expensive than going outside. In many months, at least the December month, you would rather go outside rather than travel in any part of India. So this is again not likely to take away anything. And health again is something, if it has to be done, it has to be done. So there has to be a more conscious decision of how much rates we want to apply. Is it just for the purpose of creating those trails that we have to do it? So if the idea was just because some people were traveling outside and not filing returns, that data is anyway available from other sources. So I think some
Mhm.
fundamental rethink required on this area.
Okay. Sonu, your take on this?
So I think Richa has covered it comprehensively, and I think both of us are at the basic point. Why should TCS be a measure when you have an income tax, advance tax, TDS, you've got GST covering all possible transactions. TCS by itself is something that is, something to be questioned. The fact that now with the architecture that the government has in place, you have the ability to collect all possible data. Now, to bring in TCS is like, we don't trust you. And this goes against the principle of trust first and compliance later. So, very much on the same points that Rich has raised, I would think that this budget 2026, if it is about administrative simplification, enabling better implementation of the tax system, then TCS is one area where they should definitely intervene. Looking at the rationale for TCS, because I think I'm pretty sure I haven't looked at that data, but if there was data that was taken out, people who are compliant, are actually facing the brunt of it because TCS ends up being part of their tax refund. And when they're getting tax refunds, which are not, by the way, that's the other issue. We've seen this year tax refunds haven't been released. So whether it's part of
Yeah.
the government's revenue management agenda that we're seeing refunds being delayed and very scary notices coming on last week of December, everybody's getting the maybe is it part of the nudge campaign to say there's a risk identified and that's why we're holding back your refund. So on your primary question, TCS requires to be removed completely. If at all it has to be, please analyze the reasons. If RBI data is suggesting that demographically it is to serve to cater to purposes of education and medical expenses, then at least make sure that you don't levy it on such transactions. Because if I really think about it, when it was first introduced, I think it was more about Indians who were probably Indians in name, but have businesses overseas and who are probably trying to move money from India, and that money is not accounted for. That was government's agenda then. Now, is it still the case? Have they been able to achieve anything out of this TCS, or is it the same taxpayers who are actually facing the administrative inconvenience of this TCS?
Okay. And Sonu, one more question related to this is about the STT versus capital gain. I mean, this is a very long issue which is being debated. That do we actually need capital gain tax when you are leaving the STT? Because both have the same aim, tracking the people who are getting benefited from that. Do you really think that both are required at this moment?
Capital gains tax is fundamental to most tax systems around the world. If at all, people have done away with income tax, but capital gains tax has remained. So I don't see capital gains tax going away. And plus, I think a very welcome change and congratulations to the government. Long-standing demand of rationalizing the period of holding, simplified capital gains tax structure, all of that has been achieved, and there is relative stability. Now we're talking about new age assets like crypto, etc. Do something about taxing it in a more benign manner for rather than a flat 30%. So I think intervention, if at all, I would want it in taxation of virtual digital assets, simplifying taxation of futures and options. You can't expect people to get audited accounts for every person who's investing in futures and options. So and those areas are newer age problems. And yes, we are willing to give the government time to think through this, but maybe leveraging from the fact that why then push people to go and invest in Dubai if they're interested in investing in crypto assets? Why bring in a TDS on crypto assets compliance here? All of those aspects, if government was to think about it, I think simplification is called for in taxing those assets.
Tanushree, my final take is about the compliance. So, any specific measure which you think to enhance further compliance in the indirect taxes? Of course, the GST is in the domain of the GST Council, but still some intention, some indication from the budget you can expect on the GST front as well.
While, this could be a little far-fetched, but really, if an option is given for revising the already filed GST returns, I feel that, sometimes could be due to ignorance or maybe, some slips here and there. Some transactions may have been wrongly reported. Now, in the erstwhile regime, we had this option of revising a service tax return or a VAT return. So, if some sort of a mechanism can be brought in wherein, the periodic GSTR returns can be revised or the annual return maybe can be revised, that really will help to ease compliance. So that we
Okay.
also, in fact, help encourage compliance. So that is a measure really. If the government could do something about that, that'll be quite good.
Richa, final word on the compliance. Anything which you think is missing in this discussion where we need to talk about?
I want to talk more about, as Sonu mentioned, there's not likely to be any changes in the rates, even on the corporate sides. They are pretty much stable. But there is a need to work on the dispute resolution and the dispute prevention side. I think that is something which takes a lot of time and effort from the taxpayer's perspective. To begin with, the CIT appeal level, that is where, the most of the clogging takes place of the system. 5.39 lakh appeals is 31st March 2025 data. And a major 16.7 lakh crore is the disputed amounts. So I think there is a need that at the CIT appeal level, cases are disposed in a time bound manner. If there is the intent of the government that they really, they have done it in various manners by increasing the thresholds of appeal and all. So if the intent is not getting implemented at the ground level, there is maybe a rethink also required to see that if there are any resource gaps at this level, because this is where it triggers it's a choke point currently in the dispute resolution area. And secondly, on the dispute prevention side, the authority for advanced ruling has been replaced by board for advanced ruling. The problem here is that the rulings are no longer binding on revenue. And so therefore there is an apprehension on taxpayers to approach it. It has got, it is really the value to provide tax certainty to taxpayer has diminished. So there's a critical need to relook at this. It needs to be binding on the tax department, otherwise we are losing the benefit of a very good forum. And also, currently, it is manned only by senior tax officers. AR, on the other hand, it had high court judges. So there is a need to again reconsider the composition, whether certain independent people should also be added, so that there is that apprehension that you are going to get only revenue friendly rulings, that also kind of goes away. So I think these are two areas which need critical intervention at this point of time.
Okay, Sonu, final word from you.
The final word, ease of compliance. I think, we're waiting for tax return forms to be notified, make it easier. And digital architecture, it is fairly good, but it has to be more supportive of the taxpayer. The other thing is on prevention of disputes and challenges, like Richa mentioned, CIT appeals is clogged up. People are waiting for CIT. And even in terms of, these kind of nudge campaign, please use it to create awareness. Please use it definitely to encourage compliance, but please do not scare people, at least the people who have, appropriately paid their taxes, etc. So I think that part of it, the customer service orientation, which was spoken about, the taxpayer is really the king, and we must be oriented towards serving in the best possible manner. I think that's the kind of income tax system that we want to be seeing come to life. We've heard about it for the last 2 3 years. We now really want to see it happen, because use of AI is also coming extensively in issuing notices. People are getting notices for questions which have nothing to do with their tax return. How much information is warranted for simple scrutiny or a simple processing of return? I think that needs to be looked at, because for an ordinary taxpayer, compliance with a notice which has 43 questions about his income from wherever, and I'm talking a lot because I deal with non-resident taxpayers or expatriates who are temporarily working in India. I think we need to make sure that our income tax system speaks of itself in a world-class digital structure, where you are already gathering information from exchange of information agreements, from your own architecture in terms of banks and all financial institutions. So ease of compliance and prevention of dispute would be my sort of recommendations to the
If
government.
If I may add
Okay.
just another point
Yeah.
to what Sonu mentioned, there are currently seven ITR forms. So
Mhm.
that creates so much confusion for the taxpayers. Your choice of form depends upon your entity type, your sources of income, your residential status, and that can change from year to year. So, just to simplify compliance, the government was initially thinking of one uniform ITR form. So, if something similar like that can be considered, in any case, the ITR forms have to be revamped today now that the new Income Tax Act is coming in. So, if you have a place where you can just select your entity type, your sources of income, your residential status, and only the relevant forms crop in, which are pre-populated. So I think that one nation and one idea form is something that we should really press for right now.
Okay, now my final words from my side. I mean, when I was a student of economics, I'm still a student of economics. So my teacher used to say that tax is a pain. So now the big issue is how to reduce that pain. Of course, that pain will be there. Tax has to be paid because government needs resources. But the effort should be how to reduce that pain. That should be the critical aspect of this entire budget thing. Tanushree, Richa, Sonu, thank you very much for talking to us.
Thanks very much,
Thank you
Shishir.
so
Thank
Thank
much.
you.
you for having us.
Yeah,
Thank
thank
you.
you.